Beyond the Code listeners, Israel has a very strong crypto ecosystem, and at the heart of its crypto ecosystem is its only crypto-centric VC, Collider.VC. And at the heart of Collider.VC is one of its partners, my good friend, Eylon Aviv, who's joining me today to discuss his investment thesis, his background, and what he thinks the future holds for the crypto ecosystem in Israel and at large.
Welcome to Beyond the Code, the podcast where industry experts and brilliant legal minds discuss the impact of new emerging technologies. I'm your host, Yitzy, a lawyer and tech enthusiast. Join us as we explore the legal, regulatory, and ethical issues surrounding AI, blockchain, and more. Get ready to go beyond the code and stay ahead of the game. We
How are you, man? Yeah.
Good. Welcome to the pod, man. This has been a long time coming. Like, we've talked about it. Yes, no, now, later, war. So happy you're finally here. A lot to ask you about, to be honest.
Happy to be here. And honestly, I'm a big fan of the podcast. Like, I've been listening to some of the episodes. It's like, I think it's one of the most high quality kind of like people podcast. Just chill, like conversation with whoever is on there. And I feel like it's very well produced. So like every time you send it to one of the groups, you just like play it. So I'm
like an audiophile. So like when I listen to podcasts, if the sound quality isn't good enough, it drives me absolutely crazy. So I appreciate that you say that. I try to keep the sound quality up to par. Yesterday I was like completely blown away. I told you that I recorded last night an episode with SEC Commissioner Hester Pierce, and she surprised me by telling me that she also listens to the podcast. So then I was like, whoa. Yeah.
That's awesome.
Like, I guess, how do you know that you've made it? Yeah.
I
would also just thank you for, you have a great platform on Telegram, the Web3 in Hebrew. It's a great place to just kind of connect with other people in the industry here in Israel, and also to share the podcast. And I always get good feedback from people who are on the group. So keep up the good work.
Yeah, I would say it's not mine. It's I genuinely believe in this. This is a community, and it's everybody's. It's everyone who's in it. It's theirs, just as much as it's mine.
Okay, well said. In this industry, community is an incredibly important feature, and it's even more important that a community is run by the community and not some kind of overlord. So duly noted. So I'll tell you, I want to talk about a few things today. First of all, I'd love to kind of deep dive into your background a little bit and understand how you fell into crypto and how you fell into venture capital. And I'd love to know what it looks like being a crypto-centric VC. We don't get many VCs here on the pod, more of like the boring lawyer and regulator types. So give us like a little bit of an insight into the Eylon. Okay, I don't know if I know your handle on Telegram. I'm not sure if it's also Twitter is the Eylon.
It's also Twitter,
if that's a nod to the other Eylon, but
I was before him, as far as I'm concerned. You know,
you are an X first. Very cool. So tell me a little bit about the Eylon's background and what it's like to be a crypto-centric VC.
Awesome. So I sort of started my journey in tech and startups. I was an early employee in IronSource, which was later IPO'd as a unicorn. And then more recently, I guess 2 years ago already, was acquired by Unity. And while I was working there, I started sort of like the lowest of the low kind of sales job. And within like 3 to 6 months, I think, maybe even before that, there was a hole in another department. And, I moved there. There were essentially some Chinese clients to work with. Like we basically did like mobile advertising. And I started working with these Chinese clients, and suddenly they were like the biggest clients of the company, like within less than 8 months of working there. Right. And so like there was like this whole thing. Chinese clients are making a lot of money. We're going to open an office in China. Hey, Eylon, you're single and everything. Do you want to go there for like 3 months to help like build the office, train the employees and stuff like that? I was like, hell yeah. And then ended up staying there for almost 3 years. Yeah, so this is from 2014 to 2017. And while I was there, so I kind of like, I knew about Bitcoin. I had no idea what it was. I kind of used it a couple of times to buy stuff online. I had a friend who worked for CoinMama, and I was like, what do you do here? And, he kind of helped me. But it really came in 2016 when someone sent me the article about the DAO hack. And I remember like reading that and seeing like, whoa, what is going on here? Like beyond just the hack and everything, there's like a body of people that are sort of like controlling money together, but no one is responsible. And I was like blown away completely. So that was kind of like the moment. This is like, I think, mid 2016. And then sent me down the rabbit hole of like, what is money, the Bretton Woods Agreement, sound money, and, sort of like that entire journey of like essentially kind of discovering that everything is a scam, quote unquote. And so that was kind of like the major thing. And then, the first thing I did, obviously, like anyone else, I have some like software development background, was to write a trading bot, which everything that I bought since 2016 basically lost in the 2018 bear market.
It's a rite of passage into the space.
Exactly, and then also got scammed. The whole thing. And so one thing that happened, like after that I read about this, I opened a group on WeChat, which was sort of like the Chinese WhatsApp,
I'm
and that
familiar.
group was it was called Crypto China, and we are just like talking about crypto. This was like before the ICO era, and then when in 2017 when the ICO era came up, it became like one of the biggest crypto communities in China. There were, I think, over 25,000 people, maybe even 30,000 people. And the topography was sort of like a decentralized groups, right? You had Crypto China, and then you had subgroups of like mining in China, which was very big, and ICO participation, and EOS, and all sorts of things. And also like localized groups for, for Shenzhen, for Shanghai. And the topography of this was like we were running the main group and like a group for which groups you can find and enter into. So like to discover more groups. And that was kind of like wild. Me and who would later become my co-founder at a startup. So I'll get to that. I left in, I think, early 2017. We decided to leave I left IronSource and we started working on this, me and my co-founder, and we wanted to bring that same topography to the West of WeChat, of sort of like a closed ecosystem, but once you're inside, there's open groups. And so on the back of what we built in Crypto China, we raised like 100K, which, back then, it's kind of wild to think, like, I invest in people right now, 100K, like no one would take 100K, right? Like I left, this is, 2017, right? I left my job. I worked for 8 months with no salary. And then once we raised 100K, we hired like 2 devs essentially, and we only paid ourselves, expenses basically.
Startup
So
life.
yeah, I mean, it's no longer like that actually.
1.0. 1.0.
Yeah,
Yeah.
exactly, 1.0. So yeah, like basically what we wanted to build is, that same topography of a community. We toured around the US in universities. We tried
What
to
was it
figure out.
called? Is
It
there
was
a
called
name to
Common.
this startup?
Yeah.
Okay.
So Common with one M, because that's how you do things. That's how startups were done back then.
You have to misspell it to make it cool. Yeah.
Exactly. And it was sort of like imagine like a Slack for a university. And then once you're inside, you have like these lists of like instant messaging group chats.
Laundry and going
So
out for drinks and study groups or whatever.
So where we got traction was actually the startup school in UT
Okay.
Austin and vegans, where they would share like recipes and stuff like that, and they would do like potlucks where they would come to someone's apartment, everyone cooks and stuff like that. So that
Unexpected.
was
Like, did
yeah,
you
yeah.
know that going into it, that that's where it was going to develop?
No,
It's
but
so
I
funny
have
how things like happen that way, right? Like you have one idea and then it completely takes off in a different direction.
it becomes I think more interesting and then more dark as well.
Yeah.
So there's a day that someone sends in sort of like the general chat, next semester UT Austin is going to teach toxic masculinity, right? And then everybody piles in. It's like the highest week of like registrations and conversation, and that kind of, you see that there's so much engagement. And so we sat and we thought like how we're gonna get this going. And I remember like we were talking about sort of like trying to engage people and realizing that the easiest emotion, like you have to tap into people's emotions, and the easiest emotion to tap to is anger. And so I remember I told Tommy, like, I know what we're going to do. I'm going to organize a pro Israel rally on campus. He was British, so it was like, you organize a pro Palestine rally on campus, and that's how we get it going. And we sat, we were thinking about this for a few weeks, and then we sat, we smoked a joint on the porch, and we like, I think he gave some
That's how
analogy.
all good ideas start, no?
Yeah, yeah, but he gave this analogy of like, if we jump through this moral fence, there's going to be so many moral fences that we're going to have to jump through in the future. And so we decided to sort of shut this down. I think the code is still open source on my GitHub. And when we returned the money, I think it was like around the month that the Cambridge Analytica movie came.
Wow.
So it was kind of like a very interesting closure.
How old were you then?
Well, I was 26, 27.
That's a like very mature decision. It's not something that it's probably not. I mean, like, I guess because you were high, maybe you weren't thinking straight, but that's not that's not a decision I think that most people would come to, and it's also a really difficult one to make.
Yeah, but it's like you realize just how like we came with the idea that we're going to make the quote unquote the world a better place, and you realize we are not going to make the world a better place. We are going to, if we want to succeed, we're going to have to make people hate each other and pit them against each other, even though they're probably like dorm roommates and stuff like that. And it was like we probably shouldn't do that. And so we shut that down. We returned like a little bit of money, and ever since I've been very involved in sort of like the crypto space. I've advised a few startups. One of them was called DAOstack, which I ended up joining, and led an initiative to sort of take the Ethereum hackathons. And, my thesis was like, we're preaching decentralization, but the hackathon judging system is all centralized. So I built a way to run hackathons in a decentralized way, like everything on chain, submissions, money, everything is on chain.
Is it
Yeah.
implemented anywhere? Like, are any of the conferences? Yeah, DevCon
so
uses that.
So we did ETH India was the first one, and then ETH Berlin,
Okay.
and then ETH Denver in 2020, which was like the biggest one.
Wow.
So I'm very good friends with like first of all of the ETH Global people, and then ETH Denver. John is like, he pushed. So I sort of like joined like a small team of people who are like building stuff for ETH Denver, and he pushes us like to the limit, and he doesn't care like things break or stuff, just like push things to the limit, which I really really appreciate. Like John Paller from ETH Denver, and it's one of the reasons why every year it's like the conference just gets crazier and like bigger and more experimental, which is awesome.
Oh, you're giving me FOMO, man.
Yeah,
we had to opt either HK Consensus Hong Kong or ETH Denver because it's like 2 days apart.
Yeah, I'm undecided on both as well. Like I just.
we opted for Hong Kong. Next year we'll go to ETH Denver. I wish I could be in two places at the same time.
Yeah.
Okay. So
yeah, and then this is 2020, right? This is the last one that I did in 2020, and then COVID came. We tried to repurpose like this entire platform for online hackathons, but that doesn't really work.
Yeah.
And then during COVID, one of the guys from Collider, Avishai, basically reached out to me. Like we were talking. Like I've known him for a while, and he told me like we're looking for something. We're not exactly sure what. And I was like, that is actually perfect. That is exactly what I love to do. Not sure what is where I shine.
What was it, like an EIR position kind of thing? Just like come here and think?
It was kind of like an investor in residence instead of an entrepreneur in residence. We had a program called Labs, which was like looking back at this. I know that both Avishai and myself were both entrepreneurs. And so Labs was essentially us not giving up the entrepreneur role completely. So we would work with companies very closely. We would take one to two companies every quarter, and we would work with them like literally every day, like pulling our sleeves up and doing dirty work with them,
like an accelerator, in a sense.
So an accelerator takes a batch of people,
but like with like more getting your hands dirty.
Yeah, but an accelerator like takes a batch of people and like runs them through something. Like here, we were just like it's one company, and we joined. It was kind of a hybrid between sort of an accelerator and an incubator or a venture studio type thing.
And you still have Collider Labs, no? Like you used
not
it in the past tense.
Yeah, but not in the same way that we did, because we realized it doesn't scale. Like we thought this could scale.
To sit in like a deep dive with each company.
Exactly.
Okay.
So
I'm just kind curious, like what were you taking in return for that like intense amount of time and energy and resources that you were putting in these two companies?
Yeah, so we would invest, and we'd also take like another portion like for services essentially.
Okay. And did those companies take off?
So, Sovereign was one of them, was one of the first ones, Stakewise, Levana, which I guess there were a bunch of them. I think lots of quite a few of them took off. Also, we did a whole batch for Luna, and then that didn't really pan out well. But I would say that back then, the only place where there was any sort of like meaningful innovation outside of Ethereum was on Luna. So, we found those companies and we're like, okay, let's work with you because we have an interesting thesis about Luna. Obviously, the underlying structure didn't really work, but yeah. So, yeah. What else?
So that was Labs. And then I guess your role within Collider developed from like an IER, investor in residence.
Yeah, exactly. So
into like more of a material role.
Yeah, so started there, and then now I'm one of the partners.
You must have grown together with the fund as well, because like I imagine it's like 4 years now that you've been there.
Yeah. 5 years, I guess, almost
5 years. Wow. So you were there like right after they raised their first fund.
Right. Yeah. So right before raising the second fund. basically.
Raising the second fund.
Yeah.
Okay. So, I mean, and now Collider has raised, what fund are they on now?
So we're finalizing deployment on the second
Finalizing.
fund.
Okay.
We will soon
Start raising your next.
start thinking about the third fund.
Okay.
And I would just say about Collider, like we're an Israeli-based venture fund. We invest solely on crypto and Web3, like whatever you want to call it. And yeah, we're all sort of crypto natives. Each one of us comes from a different background. I like to say that we're 5 partners and we each have different theses, and sometimes they're competing, right? And they fully do not align with each other. And that's what makes it interesting, because I mean, we're Jews, we're Israelis, and kind of like the fundamental basis of what makes us Israelis is that we like to argue. So that works very well.
So
And
I'm sure you've developed some kind of consensus mechanism for how you guys manage yourselves internally.
so
But
we actually don't make decisions on consensus basis, right? Like I
really,
could be, yeah,
okay.
I could say that I want to invest in a company, and all the other 4 partners will tell me no, and they could try to convince me, but I still have the mandate to invest, like whatever, because like we really believe in that sort of
And have
thing.
you, or have any of you? Like, do you guys typically, even though you're not required to, do you typically invest on a consensus basis, or do you guys go rogue on one another?
No, I don't think we'd go rogue on one another, but like usually you would want another partner to sort of like back you up
Back you
and
up?
sort of like see what you see. But there have been times where like it was very conflicting, like just put it this way. And 2 of us actually invested. And I mean, I'm happy to say that some of those, I mean, I mostly do like the super early stage people at the idea stage. I love to talk to them, to work with them, and like polish what they do. And I'm very happy to say that I have 2 slightly controversial investments, and now they're going on to like proper A round
Wow.
with
Okay.
some of like the biggest VCs in the US, and one of them is like partnering with both Uniswap and Optimism. So yeah, like
It's exciting when you get to see like your conviction come to fruition.
yeah.
Right. Very, very cool. And I imagine also your level of involvement with the strategic day-to-day of the companies also kind of evolves as they evolve, right? I imagine you're still very heavily involved at early stages. This is also kind of feedback that I've heard from some of our clients and friends in the space who've worked with you guys, that you're, in addition to the fact that you're crypto-centric VC, you're also very well versed in the technology and have a rich network, and you dedicate a lot of your time and energy, like you said previously, to like sitting and working through some of these issues with the clients. I wonder if as somebody who invests predominantly in tech, how much weight you put on the team and how much weight you put on the product.
Wow, I mean, it's a brilliant question. I think, the earlier you go, the more it is the team. And I think 100% of the companies that we invested in, what they originally had in their deck is not what they
What they are
executed
today.
on. Yeah.
Okay.
And I think like Brian Armstrong has like a very good quote from Coinbase about like, action produces information. So you raise for something, you have an idea, you build something out, you send it out into the real world, and then you get feedback and you realize that you're probably not in the right direction, or maybe a portion of that is in the right direction, and then you chase that. And I think, I mean, the story of Coinbase is that they started as a wallet, and then they realized, oh, people are trading inside their wallet. We need to build them that feature, and then it became an exchange. So I think it's like 100% of like the startups, and I think like plan and articulating what you want to build is very important for me as an investor, to see how you think or how you see things and how you think they're going to develop. But you're not, don't worry, like you're not going to be building that, and it's okay. You're going to iterate, and seriously, it's fine. And you can see some founders, it's very difficult for them. And I mean, I just had a call with another, like a founder yesterday. They're sort of like iterating on something, and then he keeps going deeper and deeper, and he tells me every week, this is the experiments that we run, this doesn't make sense, these don't care. And then, but we did this, and a bunch of people are like, yes, we want this, like right now. And so we're scribbling something up, there'll be an MVP tomorrow, and they'll be able to use that. And so I think like the rate of iteration is like the most crucial thing, especially for early stage startups, and especially in crypto, where you don't really know what will work. And honestly, it's like very easy to get trapped in, I would call it like the current thing, the current shiny thing that distracts a lot of founders from what they actually want to build. So
And the
So yeah,
current shiny thing now is meme
probably
coins.
AI agents, I would
Not
say.
right, AI agents. I forgot that meme coins was yesterday.
Yeah.
Um,
I mean, AI agents, I guess, is a form of a meme coin.
but it's
So
so funny how much that's exactly it. It's so funny how much similarities there are, like from hype to hype. So it's like AI agents, in the way that people interact with the FUD is so similar to the way they interacted with meme coin FUD. Like it's all just like quick and easy, and and if you're able to see through the noise, like there's some really interesting things at the core, right? Like the
100%.
notion of like, I had one guy here up on the podcast, JD Thor, who talked about, like, he had a whole thesis on memology. Okay, like memes were a lot more than just memes from the way that he looked at it. It's like it's a way of people interacting with one another, and it's representative of so much more at a deeper level. I don't know if I would go that deep, but
Yeah.
there's definitely, but definitely at the core of all these like hype trains, there are real lessons to be learned, right?
Yeah.
NFTs taught us about community, and they taught us about what works or doesn't work in decentralization and governance, and being transparent and communicative with your community and delivering on things. And I think that like at each one of these like hype trains and life cycles, we're able to like learn about a real core use case. Just a question of what we're able to take from that and implement like into real products that people want to invest in and buy, and will sustain the next bear
Yeah.
market.
So I would agree almost with everything you said. I don't think meme coin specifically taught us anything. I would agree that AI stuff, like the way they're structured and the way they're being built, is interesting in that regard, and that will sort of like amount to something. I don't think
Mhm.
meme coins will amount to anything. Honestly, it's kind of sad, but I generally don't think like there's too much
I'm
innovation
struggling
there.
here to
Except,
try and see the positive aspect, but I do think that there's I don't know, that I still think that there's what to be learned. Okay, even if it's to learn from people's greed. Okay, meme
fair.
coins is just 100% greed. Okay, greed of the person who issued the token, greed of the people who purchase the token, but like beyond that, messages about life. Okay, maybe I'm getting too philosophical
Yeah.
here, but I'm gonna work on that thesis a little bit. I'm gonna come back to you with it, but I
I will
still am
say,
optimistic even on meme coins.
yeah, I will say that I think Ben Horowitz said this
Hmm.
about like meme coins, and he claimed that this is a part of the strategy of the SEC over the past 4 years to sort of discredit and eliminate crypto. Like, do not say what you can do, be as vague as possible from a regulatory perspective, and then you're pushing the industry to doing, you know, something that the SEC will not be able to enforce because you explicitly say that this has no value, right? And his claim is that this is a part of the multifaceted, agency strategy of the US regime over the past 4 years to discredit like the entire industry.
And you believe
Um,
that?
I mean, it's very aligns very well with my
I'm saying
confirmation
it's
bias.
not
So
conspiratorial. It's not conspiratorial. There's definitely some truth to it. I don't know it's if it was done from in such a malicious sense.
I don't know.
It's definitely a
I mean,
byproduct.
it's interesting to see because it was a multi-agency crypto army of Elizabeth Warren, right? So I wouldn't. I mean, I don't think these people are not smart, and so I think they could probably come up with such ideas and stuff like that. But let's see what happens now. And I mean, this is a question for Hester Pierce for yesterday, but yeah.
Yes, we discussed all that and more, but I think let's not dwell on the past,
Yeah,
on the Gary
very
Gensler's and
bullish
the
on the
Elizabeth
future.
Warrens. I'm very bullish on the future. I think it's very interesting to see like how much the lack of access that we've had to American markets over the past few years, and the efforts that builders needed to take to either close themselves out from American consumers, or if they were Americans, just to go abroad to make sure that they weren't building at home and exposing themselves to not clear regulatory regimes. We're going to see a complete reverse on that now. I think we're going to see more and more companies, more U.S. builders staying in the U.S., and more companies who have existing structures outside of the United States and maybe blocked American consumers are going to be looking to be very heavily represented within the United States. It's just a question of when those guidelines are going to come. And from what I read, I think this morning on CoinDesk, Trump is looking to make some very positive declarations vis-a-vis crypto in his first day in office. So like it's crazy how like such a small, well, it's not so small, how crypto has like dominated such a big part of the conversation around like American politics when America has so many other issues to deal with.
But I mean, I know that it seems like it's just crypto, but it's not just crypto. It's like it's innovation in general, and crypto is just like the most glaring one because it was so anti. Like the regime was so against it, but they were also against AI, and they were also against generally tech companies, and they were generally against progress. And it was kind of wild to see. I mean, crypto was the poster child of it because it was suffered the most, but it's kind of like all like progressive industries. And it's kind of funny. These are the progressives, right? Who are stopping the world from innovating with like weird regulations. And I think,
yeah.
yeah, I do think though, and I will say, I think there's a double-edged sword here in sort of like the acceptance of crypto. And I think it's in the form of like, generally we're talking about tokens as governance tokens, but underneath it, I think we're all kind of expecting or all kind of knowing that what tokens are just 1,000 times better equities compared to what you have right now. Because right now you have equities that are, the way to execute on them, the way to govern them, the way to sort of like trade them is riddled with 1,000 middlemen. Right. And so we're eliminating all of that. We're including like the custodian, right? You have to also have like lots of rules and regulations who custodies them. So we're eliminating all that. We're putting that on chain. And up until now, we were never able to use the most fundamental properties of equities, which is like sharing of the revenue, whether through like dividends or even kind of buybacks were not as clear as they could. And so let's imagine we get all the most favorable regulations. The Trump administration, or I think it's David Sachs who's actually running it, but he will declare what are sort of the bounds of tokens being equities, how can they distribute value. And then the first thing that will happen is that these tokens are going to be measured by the value they produce. Wild idea, right? So you will see price to earnings ratios inside tokens. And so everything that is trading right now at, 300,000x multiple from, the revenue that they're generating to the value of the token, everything is going to shrink down. And I think, like in general, my investing philosophy is that innovation and regulation are two ends of the same spectrum. And so the place to have completely outsized returns is the place where the regulation is not very clear. And so you can progress in a certain path until they sort of like come and grab you. And the come and grab you moment is coming. So there's going to be regulation around the industry. We're going to be able to be a lot more within the bounds of something reasonable. But I do think the valuations of most of the things in the space are going to go dramatically down.
Okay, but that's like it's a price correction. It's not like it's not going to tank. It's just going to be more reflective and less hype induced. I think like my biggest fear is that the new administration, led by its crypto czar David Sachs, is gonna go completely in the opposite direction of what we're like right now. There was no guidelines and regulating by enforcement. I think that we're going to go in the complete other direction, and we're going to set guidelines, but I'm scared that they're going to be too fluid. And then you're going to have people, certain bad actors, like we've seen in almost every facet of the space, that are going to come and they're going to take advantage of that to scam people to get rich quick. And then there's going to be even under the existing administration, like new, more restrictive guidelines and regulation to kind of compensate for those bad actors who came in initially when we were getting softer. And there's gonna be a correction on the regulatory side as well.
Yeah, yeah, very interesting. I'm hoping that David Sachs is more thoughtful than anyone else, right? I mean, any of the previous regulators that were sort of like trying to figure this out, and so. Yeah, I mean, I get what you're saying, and it's a risk, but I mean, at the end of the day, the biggest menace to the industry, right, was Sam Bankman-Fried, and he was meeting regularly with Gary Gensler. He was meeting regularly with like other regulators. He was one of the biggest donors to the Democratic Party. So if they didn't stop him, like, I don't think they're going to be able to stop anyone, basically.
Yeah.
So
I'll give you that. So tell me, what's your current investment thesis? Like, what are the things that you're most excited about, most bullish on, tokens or platforms, dApps?
Yeah.
Give us some alpha.
So I think in general, like people are saying, like it's time for consumers and all of that. I think it is time for consumers, but I think there's still a bit more infrastructure that needs to be built. So I'm definitely interested in infrastructure still. We did do a few investments into consumer applications. If it's a consumer application, there's a book called Hooked by Nir Eyal, which I read, when I started my startup. And the goal is to bring the user to your app every day, and you have to structure it so like psychologically you're bringing the user into the app every day. So that's what I'm looking for when people talking about like crypto consumer apps. And my take is that it's just you're baking financial things into everything. It's good and it's bad, but it means you can sort of like there's a price for everything on the internet. So that's that. On the topic of AI stuff, I can tell you. So my belief is that I cannot invest in something if I don't really, if I'm not even like to the slightest a part of it. And so like 3 months ago, like before this whole AI saga started, I made an AI rabbi. And it's ongoing. It's on Twitter. It's like engaging with people.
It's awesome. I've messed with it.
Yeah, and it replied to the Aave tweet like automatically, right? It replied to the Aave tweet after 5 years. They celebrated 5 years of existence. It was like, Aave is like a gamach. It's like the lowest possible interest rate. And I was like, whoa, this is wild. So it's kind of interesting to bring like Jewish insights into the crypto Twitter or whatever.
Sure.
But so I think the interesting thing about this whole AI stuff is, first of all, the open source library, AI16Z, Eliza OS, like whatever you want to call it. I know people who are not into crypto and they ask me about this, and that's super interesting to me. The fact that, they are using this framework to build AI agents and they don't even know that, it's somehow related to crypto. And so I think that came along, and then there was a token that was completely disconnected from it, but it was a way to capture the sort of like mindshare, the stars on GitHub. It was sort of a way to reflect how many stars it has on GitHub, how much mindshare it has. And I think that's very interesting. I'm not at all certain that
you need a token for that.
It's not. It's only
you could have just had stars.
Yeah, I mean, it's not even about the token. I mean, you do want to capture value. You do want to sort of like give. Like I wrote about this in 2018 about like tokens being the way to capture value from open source software. My bigger reservation is like, is this what AI is supposed to do? Just like spam bots over Twitter? Like, is that what we're building? And so I'm trying to see and think, what are some of the other aspects of AI that it can do that will be built in the same decentralized way? And just for context, like Eliza OS, it's kind of like a library that allows you to build an agent, give it like characteristics, stuff that it has, goals, and a bunch of other things. And then, an endless amount of plugins that you can add into it. So someone wrote a way for the agent to have a crypto wallet, and someone wrote it for a Stripe account, stuff like that. And that is a perfect example of decentralized innovation. Like many different people have built on the same underlying stack because it's open source and people feel, they can do that. And
going back to your first thesis that you're interested in investing in infrastructure, the infrastructure here is Eliza's operating system. It's not whatever's being built on it. Yes, we should encourage these people to build out these specific use cases off of existing open source code, but is that something you'd want to invest in, or is that something that you'd want to say, okay, I can come and I can make my own agent based off of this?
So the question
is, companies that are worth investing in, or are they just like cool use cases? Because I know that like when AI became like, in its first hype round, like after ChatGPT 2.5 or whatever, everybody was just taking ChatGPT's API, throwing on their own data models, and they were calling it a startup. Not necessarily something that has like sustainable investment value over time.
It's
and
still
now
that,
we're doing
though.
The same thing with AI agents. It's still that.
Yeah, it's still that. It's still GPT wrappers. Everything is a GPT wrapper. But the question is, like, if you've built an operating system and there's an ecosystem on top of it, maybe there's a way to capture value from the ecosystem that is being built on top of it. The modules, the interactions, the sort of like developer mindshare. And I'm not entirely certain that is true, but something really interesting happened with Eliza OS, which is the decentralized innovation, and so many people piloting, so many people contributing code. And I think that was directed at essentially spam bots on Twitter, right? But what other things can we build with AI agents like that? This could be like to power your home, or to control a keyboard and mouse and do stuff on your computer. I don't know. Like, these are all very, very, very interesting aspects. And I'm all for decentralized innovation, or just like Eliza OS did. And so looking for stuff in that space as well. What else? I mean, I'm very biased and mostly focused on Ethereum and the Ethereum ecosystem. And Still, yes. I mean, probably at some levels this is wrong, but yeah.
Do you get a lot of heat from your partners on that?
No, I mean, we're all sort of aligned on that, and this
Okay.
is a problem. Like, we like to do the ifcha mistabra stuff. Like I told you,
Yeah.
like our investment committee is like, we would, if we're doing a big deal, then someone will be the red team, right?
Okay.
Someone will find all the faults and like present that. And so when we're all aligned on like we don't see anything interesting in Solana, that's a problem. So yeah, hopefully we'll see like some interesting stuff. Like I'm not ruling this out completely. I'm talking to investors who are investing in Solana, and if I see something interesting, I will definitely invest in there.
You're talking to investors who are only investing in Solana? Like people, there are investors who are only investing in Solana?
Yeah, of
Why are
course.
people so bullish on Solana?
No, I mean so as a fund, you want to figure out what makes you unique, right? I
Okay.
think our sort of like unique factor is the fact that we're the biggest in Israel, all right? And Israel is obviously going to be big. It's very big in tech, so it will likely be very big in crypto as well. And so that's kind of like our differentiator. So
But are
there's
you an Israeli fund in your mentality? Like you invest in crypto companies generally, not only in Israeli crypto companies, correct?
That's true. Yeah, about
Okay.
50% of our investments are in Israel and
Are
50%
homegrown.
abroad. Yeah.
Okay.
The thing is, we think that we bring the Israeli mentality to founders. And I've seen it several times with like, especially Eastern European teams, where it could be like Avishai and myself would sit on a call with them or we meet them and it'd be like, they would talk to us, they would say something, and then I would be arguing with Avishai about, what they're building. And they would see like the way that we're arguing and they would like sort of like really be inspired by that. And, so I have one opinion, Avishai has another opinion, and then now they can choose on what they think. And they were like, wow, this is such a way better way to communicate, to sort of like, if you think there's something wrong, argue about it, like make sure that you get each other's points across.
Yeah,
And
rather than being like politely silent and then waiting for it to blow up later and
yeah,
say, I told you so.
this is honestly, this is why Israel is the startup nation, quote unquote. I think this is the fundamental reason. For early stage startups, you have to argue and you have to sort of like express yourself, and if you see that something is wrong, you have to say that. And yeah, this is, so one of the things that we do is that we bring that mentality into startups that are even abroad. And we've gotten feedback that this is brilliant, this is great. So yeah.
So tell me, what's the landscape of crypto-centric VCs globally? Like how many of you are there? And like what's your level of interaction with one another?
I have no idea how many VCs are. I would assume over 200.
Crypto-centric, in other words, that only invest in crypto
Probably.
companies?
Yeah.
Okay.
I would assume. Maybe it's died down now. I feel like many funds are not going to be able to raise another fund. I heard of a few that are closing already.
Mm-hmm.
Um, but yeah, so I mean, the level of interaction is like, so the structure is we do usually like first and second check, right?
Okay.
And so we have like funds above us that they don't do first and second check, but we want to have a very good relationship with them because they do mostly A rounds.
They'll lead the A round and
Yeah.
you'll have been like an early pre-seed investor,
Yeah, so
pre-seed
we like
VC.
to have like very good relationship with some of these guys, right? So they're
Mm-hmm.
kind of like above us in the sort of like the startup life cycle, right?
Yeah.
These are sort of even like A16Z or Paradigm, and some of the like the usual suspects, or Coin Fund.
Mm-hmm.
And so we want to have like a good relationship with them, as sort of like give them deal flow that is interesting. We also have our peers, also other funds that are raising, that are investing in early stages, and we're in touch with all of them. I think, as opposed to like traditional VCs, where usually there's like one person, one VC that like takes the entire round or like most of it and leaves a little bit to others. In crypto, it's not really the case. Like most stuff are like party rounds, or like there's a lead, there's a co-lead, and we've done many investments like that. And then there's like a bunch of other VCs that are sort of like following. So I don't see it as a very competitive space in terms of that. And I think, I don't know, just like um from personal experience, like if I want to get into a deal, I would sit with someone, and if they meet me, like they would likely want to work with me. I mean, it's usually, what do you call it, like bilateral, right?
Okay.
Because I'm generally very, very crypto oriented. Like my entire sort of like goal, I realized like a few years ago, is that I want to push this entire ecosystem forward as fast as possible, and to contribute and help as many founders as possible. And I'm like a believer,
I
and I
think
like
we
to
need
get
to
my
get
hands
you
dirty.
we need to get you a Superman cape.
Yeah. No, but I mean, this is I'm not there's no, I don't know, overlay or anything that I'm sort of like putting a mask on. So I think people see that, and Yeah, so like generally we're in contact with many VCs, like on a weekly, or like after this I have a call with a friend VC, and we share deal flow. We talk about like sort of like what we're seeing. We even help each other with fundraisers. So I think it's very friendly
I
compared to.
love that.
I mean, I don't know. I was never a VC in like traditional like legacy tech. So yeah.
Okay, two questions for you. First, I worked for years and years and years in traditional high tech, working in big Israeli law firms, and we only did obviously equity investments. And one of the things that surprised me when I came into crypto and decided that I was gonna focus my efforts entirely on this sector is, I mean, I guess there were two things that were most different. Number one, privacy is not really a thing, like GDPR and personal data. There's less interactions with these products with personal data, so a lot of the privacy aspects that you're used to dealing with in traditional tech are not at all relevant. And the second thing was that a lot of the regular corporate governance, but especially on the fundraising side, like equity fundraisers, were less and less popular. But I'm starting to see a shift now. Like in this round, I'm starting to see a lot of much less SAFs and public sales, and a lot more of companies going back to equity fundraisers. I wonder if this is something that you're also seeing and why you think this might be.
Oh yeah, so I thought until very recently, I thought SAFT were like completely gone. I mean, SAFT is kind of like what happened in like 2018, 2017, 2019, maybe a bit after. No, actually, during COVID, there were actually SAFTs as well, people who are raising directly for a token. But the realization right now is generally that you raise for an equity company and then you have a token warrant. And usually the token warrant will grant you anywhere between like 50% of
And that's like a side pot, or it's like you would convert your equity into a token.
it's a side pot, probably,
Okay.
because usually, like you would keep. So what happens that the company would usually split, and there would be like the labs, like kind of
Mm-hmm.
like Uniswap labs,
Yeah,
right?
yeah.
And there will be the foundation, and the foundation will issue the tokens according
Well,
to the
that
equity
assumes
holder.
a governance model. If there's no
Yeah,
governance, you wouldn't need a foundation.
yeah, but usually
Okay.
the token is being issued through the foundation, right? And then the token holders are supposed to fund the labs company, right? They should to give it tokens. The labs company can then sell it, and then
Right.
fund developers
And
to
then
build
assuming
the.
that the IP ultimately belongs to the DAO foundation and the DAO, then the labs company would be worthless. So like holding equity in a company that has no assets
Yeah,
wouldn't give you much. So then you would convert over the token. Okay, I'm familiar with that model. Is that something that you're seeing more and more of now?
yeah, for sure. And I think this has been led by like A16Z for sure. Like they sort of standardized the safe plus token warrant. They have their own thing. I think it's
Mm-hmm.
all public too.
Okay.
But I mean, they standardize it. They also wrote a big article about why SAFTs are predatory. And so, in general, when you like why SAFTs are predatory, in general, if
No
you,
accountability.
it's A, no accountability, and then there's anti dilution for the investors, right?
Right.
Like you get a set of tokens that doesn't really like make sense. So yeah.
Okay. And as an investor, you prefer the new existing current model, whatever we're calling it, the equity plus warrants versus wholly liquid tokens.
Probably yes. Like it gives you like a little bit more clarity,
Mm-hmm.
and usually like in these agreements there would be some sort of like, I mean, if you're leading the round, there would be you'll be a part of like the token issuance, whatever the sometimes they call it committee, sometimes they call it like various other things. But yeah, like you want to be a part of like deciding how the token is going to look like. The nice thing is that usually the team and the investors are in the same boat, so whatever we decide together, right? Whatever the vesting schedules and stuff like that. I also have like a small rant about that if you want.
Go for it, man.
Yeah. So vesting, I think you're allowed to say retarded now, right? It's
On this podcast, you can.
yeah,
Yes, I would tend to agree with you. They're completely retarded because you wait forever until your token becomes liquid, and then you want to, sell the token, but then everybody is presumably on a similar vesting schedule, and like there's a insane dump. Your token becomes, if it was on a upwards trajectory because the company or the protocol was doing well, and you were really excited because you're getting to that vesting point, then now when like 30% of the tokens are going to be dumping on the open market, whatever that was is going to tank. Like it's a retarded model.
yeah. I will say. Wait, can you hear me?
I can hear.
Oh, okay, okay. One of my headphones died. I will say, I will give a little caveat, right? I think like the best standard we have is 1 year cliff for your vesting schedule, right? But it's very rare for any software, any development to reach some sort of product market fit like within 4 years. Like this virtually never happens.
Mm-hmm.
And so like if you're doing these super short vesting schedules before the product reaches any sort of like maturity that it can actually capture value or return value to the token holders, like what you're doing is you're allowing people to essentially pop and dump, and it's investors, it's the team, it's everyone. And I've argued this several times.
Not just
Vesting
allowing
schedules,
it, you're forcing it,
yeah,
right? They have no other choice.
yeah. So I've said this several times, like the vesting schedule should probably closer to 10 years. And, founders will look at me like, that's insane. I'm not going to take this. No other VC is going to take it. So like, why? But, that's my opinion. And I think like, it's kind of like a play short-term games, win short-term stupid prizes, I would say. Right.
Yeah.
And like, if we're as an industry continue to like incentivize like these short terms, like
Then we're not
gonna
going to see sustainable products in the long
yeah,
term because we're incentivizing make a quick buck.
exactly. And yeah, the other sort of angle for this is like, don't like, all vesting is liquid on day one, like 100% of the tokens are vested, and then I could see the argument for that, but I think it would also create like weird perverse incentives, especially for VCs. So yeah.
Okay, so let's just talk for 1 minute about the Israeli ecosystem, which we're both a part of, and I think
I have a scoop.
Give me 1 second.
Yeah.
It's a pretty awesome one. Like for a small country with a small, well, not a small tech scene, but we have is a relatively small crypto facet to the tech scene where we make quite a bit of noise, both on the production side, the companies that we manage to produce from here, and also. Once upon a time on the event side. Give me the scoop, man.
Yeah.
I hope it's going to be a building blocks.
It is a building blocks.
All right, 2.0.
Yes, 2.0.
We have a date?
Yeah, we have a date. It's the 27th of March.
Okay.
Enough time after Denver and enough time before sort of like the European crazy conference weeks.
Mm-hmm.
Yeah. And already like sort of like on this is like Starkware and Phoenix and SSV and sort of like the usual suspects that, in Israel. There are a few that are in the last stages, like, the other big ones of like sort of like joining, participating. It's going to be way bigger than last time. It's over 800 people in Jaffa, in the Jaffa port. Like we have an incredible venue. So that's kind of that. There's nothing public about this just yet. So I hope that before this episode airs, we'll be able to actually go public.
Have it materialize? Okay.
Yeah. Because we're going through a redesign, a rebranding of the whole thing. So we're trying to finalize that so we can.
Very exciting. Okay.
Yeah. So yeah, that's that. And to the other things that you said about the Israeli crypto ecosystem, I would say, and this is kind of like part of my sort of like thesis and story for the next fund, our next fund, is the Israeli tech ecosystem compared to the world tech ecosystem is a certain like ratio, right?
Mm-hmm.
And if you look at the Israeli crypto ecosystem compared to the world crypto ecosystem, the ratio is off. Like the Israeli crypto ecosystem can grow by a lot more to be on par. So, I will say this has been my focus for the past like probably 2 years, maybe more, of like bringing the traditional tech ecosystem onto crypto. And I think this conference is like part of that, is what we're going to focus on that. We're also teaming up with Mamram, which is like one of the biggest alumni organizations. And like their goal is to bring sort of like people who are already working in tech and bringing them into the conference to learn about crypto, to learn about like Web3 and, get in and start developing it. So, yeah.
Okay, very cool. So I'm very excited about that.
Yes,
you'll have to let me know when I could air the episode, so you could finalize by then.
It will be in the next couple of days, so I think it should be okay.
Fantastic. So the last thing I would ask you to do is just to kind of like, I'm familiar with the Web3 in Hebrew Telegram chat. People who are listening and want to, read your blogs that you share frequently and kind of just follow your content. Where are you most active? How could they find out what you're doing about building blocks, about what Collider is doing, and just generally also like if there are people who are listening that are building early stage startups and want to get in contact with you to discuss potential investment or some kind of advisory capacity, what's the best way to get in touch with you?
So the Eylon, like TheEylon, right? I'm like that on Twitter, on Telegram. It's the same handle. Like, feel free to message me. If you're in Israel, I would definitely grab a coffee with you. Or if you're not, like, let's do a Zoom if you want to talk about anything in the space. I'm very open. And like you said, there's like the Web3 Hebrew community, which is like a great community that talks about crypto in Hebrew. And what else did I want to say? Yeah, my writings is like I have Eylon.eth.limo. I'm actually using my ENS as a website. And so like all my writings is there. Also I have a section for memes because I make a lot of memes. This is one of the things that I see as contributing to my portfolio companies, because a meme is worth 1,000 words, right? And so like all my writings, my meme generation and stuff like that. So it's the Eylon.eth.limo. But just generally like Telegram. Telegram would be the best. Yeah, happy to brainstorm, chat, help you, connect you. So yeah.
Awesome. Okay, thank you so much. I'll also share all these links in the episode summary. I really appreciate you joining me today, and I'm looking forward to Building Blocks 2.0. Thank you for listening to Beyond the Code. If you enjoyed this episode, make sure to subscribe, share with your friends, and to tune in again next week for more fun and insightful conversation.